So my name is Akiba Leisman. I'm the CEO of Mako Mining. A few weeks ago, we announced a transformative acquisition of another developer company called Goldsource Mines. So I'm going to give a little bit of an overview of what Mako Mining is about, and more importantly, about what the combined platform between Mako and Goldsource is going to be. So let me first describe what Mako is. Back in 2019, we started to develop what was going to be the highest grade open pit mine globally. This is an ore body over at San Albino in northern Nicaragua, where the veins are grading somewhere in the neighborhood of about 17 grams per ton on these relatively narrow vein systems. General widths are about a meter wide. And when you factor into dilution, it's going to report to a head grade of somewhere in the neighborhood of about 8 grams a ton. So off the charts when it comes to an open pit mine. We started building San Albino in 2019. It was going to be a 12-month construction schedule. We raised US $40 million of equity capital and overall $21.5 million of debt, not only to build the plant and the facilities, but also for general working capital throughout that time. And a few months into the construction of San Albino, we were hit by the global pandemic. So think about that for a second, is that here we are, a junior mining company, working in a jurisdiction like Nicaragua, 30% done with the construction of the plant, building it during a once in a 100-year global pandemic. And we were able to deliver it more or less on time, more or less on budget, in one of the most challenging environments over the course of the last 100 years to build a mine. And the only reason why we were able to do this is because of how Mako is set up as a company. So firstly, a little bit about the background of how this came to be. So my background is that I used to work for a private equity company called Wexford Capital. They're the controlling shareholder of Mako Mining. They own just over 50% of the current Mako, and then post-merger with Goldsource, they'll own just under 50% of the combined company. Wexford has very deep pockets. The controlling shareholder of Wexford is a person named Charles Davidson. He's a very wealthy individual, a very astute investor, has a lot of success when it comes to investing in natural resource companies. For some of your clients and investors that you talk to in Europe, for those that don't know about Wexford, probably the most famous investment that they were responsible for is that they created basically from scratch, what's now going to be a $60 billion oil producer called Diamondback Energy. It's the third largest producer in the Permian Basin, a strategic oil field within the United States. And a lot of the things that we do over at Wexford is to create companies that really are designed to do very similar things to what Mako was set out to do, which is you start a platform. You have a good mine, cash flowing, build it small, get all the kinks out, and then when the time is right, you start to expand. But we would not be able to do this if it wasn't for the operating team that is also associated with Mako. So my COO is a person named Jesse Muñoz. He and his family used to own and operate a full-service engineering, procurement, and construction management firm. There's about 19 people in his organization. And really, their skill set is to bring everything associated with mine building to the table. So everything from mine engineering to mine geology to metallurgy to administration, everything that it comes to go and build these small to medium scale assets. So when you're in 2019 and when you're dealing with a junior company such as Mako, where effectively we have a relatively small market cap, a relatively small balance sheet, when you strip out the layers over here, there's actually a lot more to the story. Is that we do have access to deep-pocketed investors. We do have access to capital, which is an extremely important thing to have in the industry. And probably most importantly, we have access to this very, very broad team of mine builders that were able to build San Albino, again, in one of the more challenging environments over the course of the last 100 years. So the mine has been extremely cash flowing over the course of the last 6 months. We reported our Q4 financials. on a pre-tax basis, the mine was generating close to US $17 million of cash flow. That's not revenue, that's cash flow, coming from an asset that was essentially producing only about 11,500 ounces for the quarter. We sold a little bit more than that, over 13,000. So even though this is a relatively small mine, it's an extremely profitable one. So now that San Albino was up and running and doing everything that we said it was going to do from the start in 2019, it was always part of Mako's strategy to go and not only grow organically, but to also look externally for some of the growth opportunities. So we were in discussions with this public company called Goldsource Mines, going back, depending on how you count, anywhere from 2 to 14 years in terms of the discussions that we've had with this company over in Guyana. So the reason why I gave such a broad range of dates in terms of how we were communicating with this company is that both management teams have actually very deep-seated relationships with each other. The executive chairman of Goldsource is an individual named Eric Fear. For those that don't know Eric, he's also the CEO of a very successful developer in Mexico called Silvercrest Mines. And before Silvercrest, Silvercrest Metals. And then before this, he was the CEO of another company also called Silvercrest, which developed a very successful mine in Sonora, Mexico called Santa Elena. And the reason why this becomes important is that the procurement and construction management firm that built the original Santa Elena open pit was Jesse, my COO, and his team, family-owned EPCM firm that was able to deliver that asset on time, on budget. Not nearly in as a challenging environment as a global pandemic, but still it was able to deliver that mine in a very effective fashion. And Silvercrest eventually got sold to First Majestic, and the spin-off company, which is now operating the Las Chispas deposit, also in mine, also in Mexico, has been an extremely profitable and successful producer as well. So Eric, who's the current executive chairman of Goldsource, he's going to be stepping on board as non-executive chairman of Mako. The CEO of Goldsource, Steve Parsons, who you'll be hearing from later, will be stepping on as president. And this is part and parcel of the rationale of the merger. So not only are we taking our platform, which has an extremely profitable mine over at San Albino, but we're also bringing in very credible people to supplement the management team. And then most importantly, we're taking an asset in Guyana that has all of the attributes that we like about development across all natural resource industries and platforms. And that's not even just in the gold space. So what is Eagle Mountain from Guyana? It has a lot of the same attributes as San Albino, is that you have the ability to build this mine relatively small, in stages, with relatively low capital intensity. And then once it gets up and running, you'll be able to expand it. It's part of our DNA on how we go and advance mining projects. You start small, you work out the kinks, you make it profitable, and then once the cash flow is starting to be generated from these assets, you're able to expand. You can do that internally, and you can do that externally, also with the types of acquisitions that we're talking about over at Goldsource. So the platform of Mako is really going to be set to do these types of assets. And it's not just going to stop between Nicaragua and Guyana, between San Albino and Eagle Mountain, but it really puts us into a position where we can really start talking about the explosive growth of a company where you actually have a platform that's established to do more and more of these types of acquisitions and more types of investments for internal growth over time. So a little bit about the financials of the deal. This is a share-based deal. We're offering 0.22 shares of Mako for every share of Goldsource. We're in the process right now of getting the circular together, so that will be available for everybody to review probably sometime in the middle of May. Goldsource is scheduling a shareholder vote towards the latter half of June of this year, and we anticipate closing at the very end of Q2. I will be staying on board as CEO. Like I mentioned, Eric is going to be coming in as non-executive chairman. Steve Parsons, the CEO of Goldsource, will be stepping in as president. And Jesse and his crew are going to be doing exactly what they've been doing over the course of the last few decades, which is they're managing the operations, building mines, and making sure that we have the platform suitable to do this again and again and again. From a pro forma market capitalization, in terms of what we're looking at, we announced the deal when Mako's share price was at 253. So right now our last share price was at 325, which is buttressed both by the positive reception of the deal by the marketplace and then also tailwinds from the gold price that have happened over the course of the last few weeks. So we will have a little bit less than 80 million shares outstanding because we've been buying back shares pretty aggressively over the course of the last few weeks as well. So it'll be slightly less than 80 million shares outstanding at the time of the closure of the deal. And then the distribution of those shares between Mako and Goldsource will be done in an 16% allocation. So the importance of this slide is that while this is an acquisition, so Mako is going to be taking over, and we're going to be using the platform and the cash flow coming from San Albino to really unlock not only all the potential that we have over in Nicaragua, which I'll address later in this presentation, but also to unlock the really attractive not only project that Eagle Mountain brings to the table, but also the exploration upside that they have from what's really an underexplored area in Guyana. So we have all the opportunities to grow with the assets that we currently have in the platform. But I will repeat, this particular deal, probably the most important part about this deal, is that this allows us to reset the playing field, to reset the tables a little bit, and make our platform strong enough to do this again and again and again. It's the same template that we brought to the table over at Diamondback, which started again from a de novo company in the private space in the middle of the 2000s to one of the largest oil companies in the world. We intend to do something very similar to that with Mako. So let's go over a little bit about what the trajectory of the company was, where it is now, and where it's going. So like I said, the predecessor of Mako was another public company called Golden Rain Resources. We merged with that company back at the end of 2018. There was a lot of disagreement with the management and board at that time. So it really did take a replacement of management. So I stepped in as interim CEO in early 2019, permanent CEO at the end of 2019. And once that happened, we were able to take the handcuffs off. We were able to go and do appropriate engineering, appropriate infill work, getting the capital into the company to go and build it. And we established basically a three-stage platform for growth starting in 2019. Build the world's highest grade open pit mine, something that was going to be extremely cash flow generative. And then with the cash flow, you're going to be unlocking all of the exploration upside within this 188 square kilometer land package that we had over in Nicaragua, and then use that exploration success to be put into a position to expand the mine to something more material, right? So the 500 ton per day scenario that we set out basically establishes Mako at about a 40,000 ounce a year producer, but we have all the runway and all the exploration there to get Mako up to 2x that, to be mining this at 1,000 tons a day. Start small, get the cash flow, invest in exploration, make the decision to expand externally. And then finally, lastly on Mako is that we did think that we were sitting on an orogenic gold mining camp. So I said we had 188 square kilometers of land, and I'll go over a little bit in more detail later in this presentation. We have 28 kilometers of strike. The entire focus on the original 500 ton per day facility over at Mako was only established on a strike length of about 600 meters out of that 28 kilometers of strike that we had in our land package. So steps 1, 2, 3, 2019, 2022, and beyond. We're doing a very similar thing after this merger. So we now have Mako doing everything that we said it was going to do back in 2019. We have the mine working better than it ever has. Like I said, we're able to generate $26 million of revenue for the quarter, nearly $17 million of pre-tax cash flow from the mine. And then we're going to be using that to unlock all of the potential for not only the assets that we have in Nicaragua, but also those that we'll have in Guyana. So again, it's going to be a multi-phased approach on how we're going to be developing the company, not only reinvesting in Nicaragua, but also looking at Eagle Mountain in Guyana, where we're going to start engineering a plant to build this on a relatively small basis to focus on the easy stuff, the saprolites of the deposit, and then put ourselves in a position to expand this asset, which is going to have over 1 million ounces of recoverable gold to start, but build this in phases in a scalability in a very low capital intensity way. So while the geologies are a little bit different between what we have in Nicaragua versus what we have in Guyana, the game plan is basically the same thing. You find the assets that make sense to phase. You find the assets that have relatively low capital intensity. You find the assets that have very quick payback periods. And then you just grow in a disciplined fashion, something that this industry has been neglecting to do for a very long time. So this is kind of who we are. This is how we've established ourselves with everything that we do, everything that we touch, and then bringing all of these attributes and people and personnel and assets to the table coming from the Goldsource side of things manages to basically complete the platform where we can look to do this again and again and again. So we spoke a little bit about the management team, a little bit about my background. I'm a chemical engineer by training. I have a finance background as well. I've been an investor in the mining space since 2006, and I've been managing mining companies in one form or another really for the better part of the last 10 years. Steve, who will be stepping in as president and the current CEO of Goldsource, was an equity analyst back in the day. He worked in corporate development in very large mining companies. He's going to be essential to help organize our organization and make sure that we have the bandwidth, not only to have continuity over in Guyana, but actually to look at other jurisdictions now that the platform is set for further growth. Paulo Durand, who's our VP of Corporate Development, he's been very helpful in making sure that we have everything ready to do for M&A events like this, which at the end of the day, we're a very small team. So it's very important to have the ability to do these things with very limited personnel. And then most importantly is Jesse and his team, where we have it's not just technical expertise, right? So Eric, who's the executive chairman of Goldsource, the CEO of Silvercrest, going to be the non-executive chairman of Mako, and Steve, for that matter, have very, very good technical backgrounds, right? So, but they are individuals. So in terms of the ability to have this breadth, not only of experience, but actual brass knuckles going in, rolling up your sleeves, building mines, it takes more than just a single individual to do this. So one of the things that Jesse and his crew can unlock is the ability to take that core team, supplemented with the hundreds of employees and contractors that we have in Nicaragua, supplemented with the eventual hundreds of employees and contractors that we'll have in Guyana, and use this as an approach to actually do the real mine building. I mean, think about this for a second, is that this industry is set up where you wind up having a junior mining community that's there that are going to be doing exploration, and hopefully they're going to get projects to sell themselves to larger companies that have access to capital, that have the breadth of experience with their operating teams. And some groups do that exceedingly well. But one of the things that the junior mining community lacks is actually the ability to advance these things into businesses, into things that are actually going to be generating cash flow. And what they generally lack is the depth of capital availability. We have that over at Mako in terms of our shareholder base, specifically our controlling shareholder over Wexford Capital. And they also lack the ability to advance these things operationally because they don't have the breadth of the team that gets brought to the table. And while I think it becomes obvious in bear markets that access to capital is important, right? So having Wexford there was essential. I mean, they were able to get us through the pandemic. They were a very large component of that US $40 million of equity and US $21.5 million of debt, which has now been nearly repaid through cash flows coming from the mine. In fact, a good portion of that US $40 million of equity has been repurchased in the form of a normal course issuer bid. So it was very good to have a financial background like this. But one of the more subtle points, which is actually going to be more apparent in bull markets like we're in right now, is that when you have small scale mining companies that go and need to build projects, there is not a lot of very well experienced, good, successful operators who can build mines. And when the bull market happens, that competitive environment is going to get more and more difficult to do. So one of the key assets that we have is capability of dealing with the bad times with access to capital and the good times in terms of availability of personnel and people and expertise who are able to deliver these projects on time, on budget, in a disciplined fashion, such that we can actually have a platform for growth that's repeatable and we can do it again and again. All right. So this is a different jurisdiction over at Guyana versus where we're operating in Nicaragua. But I almost joke around a little bit that if you had no context about this company whatsoever, and you looked at this map, you can say, you know what, those countries actually make sense together. If you actually peel a few layers of the onion a bit over here, there are actually a lot of similarities between these two countries. They're relatively small, relatively low population centers. Nicaragua only has about 6 million people. That's a population. Guyana has less than a million, about 700,000 people living there. They both are mining-friendly jurisdictions. They have governments that want to build mines. I mean, think about that for a second. Is that we operate in? We're looking right now at the Americas, and you can put a frame of reference over in Europe and Africa and Australasia as well. For the listeners on this presentation, but just simply in the Americas, think about how many countries in this map have governments at the local or federal level that just don't want mines. I mean, think about it. I sometimes I live in the United States over here, so I'm filming this from New York, and then we've had in the last week 2 major projects in the United States that have been denied from a permitting perspective because the government, first of all, the United States is a very large economy. Like mining is a tiny component of it, so it actually goes down the list of levels of importance. But there isn't a push from the top to get these things developed. Think about all the issues that you have even in Canada, and obviously that's we know about the issues in Mexico. You can point to just about every single one of the countries elsewhere in Latin America, and it is honestly, it's been a pleasure kind of working in Nicaragua in terms of at the local level where we have stakeholders there from we're part of a relatively small community. The nearest town by us is 5,000 or 6,000 people by population called El Hicro. Everybody loves the fact that the mine is there. The local government over there, super supportive of us developing it. The people there really want the mines. We have great relationships with people that work for us. We have great relationships even with the artisanal miners who are out there just trying to have a business of their own. And then at the federal level, we actually have a government that really wants to advance mines. Guyana is the same way. It's the same setup. For those that aren't familiar with Guyana, this is kind of a miracle of a country. They discovered one of the most important oil finds in the last 50 years offshore. And again, this is a very, very tiny country in terms of population. So it's going through a revolutionary change right now. Now, part of that revolutionary change is that when you make this massive world-scale energy find offshore, the first thing that a government thinks is that, all right, well, there's a lot of cash coming in. We're going to be transformed in terms of an economy over here. But one of the things that offshore oil exploration doesn't bring is a diversification of employment across the country. So there is a prime directive from the top of the government saying, yeah, we basically hit the lottery. We hit the geological lottery in terms of what's happening over the Starbrook field. But we actually need to invest in the infrastructure for the benefit of the people. We need to invest in industries that have the capability of spreading the employment opportunities across everywhere, not just in the capital city of Georgetown, but everywhere else, inclusive of in and around Madia, where this particular mine and asset or a project and asset is situated. So for different but kind of similar reasons, both countries are in a position right now where mining is a strategic initiative for both countries to go and advance. And you can feel it when you're down there. You can feel it in your communications with every level of government and at the local population. They want you there. And I can't express how important that is, especially where it really does seem like just about everywhere else in the world, it's getting more and more and more challenging to develop these things because of the impact that mining potentially can have, and whether or not there's actual true government support to advance these very important projects for the economy, for the people, personnel, for the environment, and everything that goes with it. So these two countries are fantastic. They make sense to come together, not just in terms of their position in the map, but also for the attributes that both countries and governments bring to the table. All right, so a little bit about the similarities of the ore body. These are definitely different geologies. So I don't want to say that we basically have our super high grade narrow vein system over at San Albino, and then you just find the same thing over in Guyana. But when you actually look at it, and when I was first walking on site over at Eagle Mountain, there are site visits probably about 14 or 15 months ago, I guess 16 months ago now. You kind of feel it. It's actually a very, very similar setup to what we have over at San Albino. You got these shallow dipping ore bodies, sometimes tabular, in the case of Eagle Mountain. And why this becomes important, it's not just because there's like some level of continuity on these pretty presentation slides. But when you deal with shallow ore bodies, it basically means you can actually start extracting them with very limited capital development. So from a San Albino perspective, we have an ore body that have these narrow veins, but they dip anywhere from 20 to 30 degrees. And the way that we can have a modicum of capital discipline and low capital intensity is you start with a couple of these small mines. And once those are cash flowing, you develop more mines. And once those are cash flowing, you grow and grow and grow. It doesn't require a lot of upfront capital to go and advance projects like San Albino because of the nature of the ore body. You look at Eagle Mountain, it's identical. Well, I shouldn't say identical, but very, very similar. It kind of rings true. So these are tabular ore bodies. They're shallow dipping. You can go and access this with very limited pre-development capital to go and turn this into a cash flowing mine. Now, on top of that, over at Eagle Mountain, is that you have this pretty decently thick saprolitic layer on top of a hard rock ore body. The saprolite's very easy to break, doesn't require a lot of energy, doesn't require a lot of grind size to it. So it doesn't require a lot of heavy milling equipment to get this thing down to a fine enough powder, which basically means you can design a plant that doesn't need everything that you need for the hard rock, but to get it started small, efficiently, in cash flow, make all the civil works decisions up front, that when the hard rock part of the project comes into play, you'll be able to make that expansion decision later. Again, low capital intensity, high capital discipline, and being able to get into cash flow in an accelerated time frame, that it checks all the boxes over at San Albino. That slide that you see, or the graph that you see below, checks all the boxes that you see over at Eagle Mountain as well. And then in terms of what we actually really like about both projects, like San Albino and Eagle Mountain, is that there are all the signatures of this being part of a larger and broader camp. With San Albino, like I said, we have 188 square kilometers of ground. We have 28 kilometers of strike where we basically have quite literally hundreds of prospects, each one showing grades in excess of 10-gram material at surface. We've not even begun to explore things that are below, let's say, 100 meters from surface, because there's so many open pit opportunities that we have right now over at San Albino. So we think that even though the mine itself is small, we're producing at, let's say, a roughly 40,000 a year run rate. But again, 40,000 ounces that is going to be generating well in excess of US $40 million of cash flow from the mine. But likewise, and we all have this wonderful camp potential within this orogenic system over here across that 188 square kilometers of ground. The same thing is over at Eagle Mountain, is that you go, you fly into Madia, you see not only where Eagle Mountain is situated, but you see across, outside of the concessions even that Goldsource owns right now, all of these artisanal mining areas where that source of gold was coming from somewhere. I don't think it's coincidence in terms of why they named this company Goldsource, is that it's quite clear from a geological perspective that Eagle Mountain sits in the center of the system that has been able to extract millions of ounces of gold already. There are millions of ounces of gold, or at least well in excess of 1 million ounces of recoverable gold in Eagle Mountain, and the opportunity in the broader district, which I think has a lot of consolidation potential, has the ability to wind up finding areas where you can find millions and millions of ounces more. All of the attributes for expansion and camp potential that we have in Nicaragua are present in Guyana. It's not enough to be operating a small mine profitably. It's not enough to be doing a low capital intensity project development, looking at this as effectively a cash box. It's important to get into cash flow. It's important to be profitable, but we are in this for what I like to call the right tail risk, about where things can potentially go right. Gold price is one of them, and then also from an exploration potential. So we have the ability, especially in this environment, to find more over in Nicaragua, find lots more over in Nicaragua. We have the ability not only to look at this project that we expect to recover somewhere in the neighborhood of about 1.1 million ounces over 15 years over at Eagle Mountain, but outside this area in this geological system, there is potential to find multiples of that over time. So plenty and plenty and plenty of consolidation opportunities that will come later. And so, like I said, we're going through this thing in a very similar fashion to what we did over at San Albino. 2019 management changes happen after a period of about 10 years of fits and starts that the predecessor company was going through. As soon as we were able to replace management, replace the board, infuse the company with the required capital, not only to build the project, but to invest in exploration, the horse was out of the gate. And we were able to go and advance that project in basically lightning speed in one of the most challenging environments to be building a mine, which was in 2019 to 2021. Same thing is going to happen in Goldsource. Now, Goldsource has been around for a long time too, but the difference between Goldsource and the predecessor of Mako is that the reason why this really didn't get advanced to a mine over the course of the last 10 years is not because management didn't want to. I think that there was like an element of that in the predecessor of Mako. Here it was really circumstantial, right? So you had a pretty deep bear market. This was an asset where at the end of the day, you're developing a mine that's going to be producing like a mid 60,000 ounce a year run rate, which is probably one notch, maybe even two notches below what major mining companies are looking for. So there was a dearth of capital availability to it over the course of the last 10 years. Occasionally there were pockets of capital that came, which was enough to drill and explore, do the engineering, develop these economic studies that came with Eagle Mountain, but it certainly was not enough capital available to it to go and turn this into a mine. So even though Steve and Eric, Giannis and Kevin are extremely competent people, knew what they were doing, knew the potential of Eagle Mountain, they were operating in a time environment between 2014 to 2023 where there was nobody out there that was actually going to logically give them the money to build this thing. So it's been kind of sitting there and advancing it on a slow pace. When this merger is closed, we do lots of things. Some people like it, some people don't. I don't think anybody argues with the statement that when Mako is there in control, we do things quickly. So we have every expectation that once this merger closes at the end of Q2, the world has changed. The platform is set. The capital is available. Jesse and his crew are there to unlock everything that we need to do from an operational perspective to get this thing done, to use the cash flow coming from San Albino that will go a long way to finance the equity contribution over at Eagle Mountain, and then be able to develop this as quickly as practicable, to make sure that we have not only the second mine within our portfolio in as short of a time frame as possible, but more importantly, to establish this platform to do this again and again, just like we did over at Diamondback. We talked about Guyana before. I really can't stress enough how unique this economy actually is right now. Probably the only parallel that I can actually think of in Guyana is for some of the oil discoveries that were made in the Middle East in the 40s and to 60s over there, which transformed a lot of these relatively small Persian Gulf entities into extremely wealthy, at least from a per capita perspective, actually just on an absolute basis and from a per capita perspective, countries situated there because of a find of this magnitude. Guyana has that potential. The operators of the oil field are Exxon, Hess, which is in the middle of being acquired by Chevron, and CNOOC, one of the Chinese oil producers over there, doing an extraordinary job of doing everything over at that field to get things up and running as quickly as possible on a staged basis. So Guyana went from a standing start a few years ago of zero oil production. They're at about 700,000 barrels a day. And then over the course of the next 5 years, they're going to be probably pushing close to 1.7 million barrels a day, which kind of pushes them in the upper echelon of a lot of OPEC countries these days. And again, in the context of an economy that only has about 700,000 people living in this country, it revolutionary in terms of what that happens. And for us, in terms of what that means from a project development standpoint, infrastructure. So if you wanted to give like a knock on Guyana 10 years ago, it's like, well, it really didn't have great infrastructure, not great roads, not great access to electricity and all of that. It's all going to change. I mean, this really is a strategic discovery that was made. And there are some more subtle elements that are probably even more important for us. Is that one of the prime concerns of the government over here is that they know that they've basically found this $1 trillion asset offshore, but they also know that $1 trillion asset is not going to be equally distributed within the country. So how do you actually advance your politics over there to make it more equitable, more sustainable, more practical, more political, even for that matter? Politicians should be political in that regard. And one of the easiest ways to do this is to look at the other industries within Guyana and make sure that they advance kind of in parallel at the same time to have these kind of employment opportunities, which not only are going to be benefited by the infrastructure coming into Guyana, which inevitably it's already starting to happen in droves, and eventually it's going to get more and more and better, but also you have the government supporting, saying, I want you to develop these projects. I want there to be employment. And it's not even coming from a revenue generation perspective. It's really coming from, I want these things advanced because that is the best thing for my country. So we see that in Nicaragua, and we certainly see that in Guyana as well. Guyana is a very underexplored country. It's always dangerous to do a little bit of closeology, but the geology of Guyana looks a lot like the geology of West Africa. The difference being it's a lot easier to explore, or at least has been over the course of the last 50 or 60 years, to explore in West Africa to find these massive world-scale ore bodies. And Guyana is basically under a very, very dense jungle and forest, rainforest over there. So it became more difficult to go and find these massive projects has all the geological potential to find these world scale assets, which is actually one of the reasons why you see a lot of majors coming in, because this is one of those countries which has a government that's friendly to mine, which has the geological potential to find these world scale assets, but it really hasn't had the attention that other countries, whether it be in West Africa, other parts of Latin America as well, but it has the potential to find these elephants. So we are in the business of being able to have these low capital intensity projects that we can advance in relatively small scale, low capital intensity tranches of capital to build these mines in phases. We did it in San Albino. We'll do that over at Eagle Mountain. But we're doing this to put ourselves into a sustainable platform so we can actually put ourselves in a position to find these elephants and these home run opportunities as well. And we'll have the ability to have more and more shots on goal coming from actual cash flow generation from the mine, which is an invariably better position to be in than just looking to raise capital on the equity side to go and invest in exploration and hope for the best. It is, even though Mako has access to capital, we have very deep pocketed shareholders that are able to advance these projects in a sustainable way. It is just easier to explore and put in risk capital with cash that is coming from a mine than cash that is coming from an investor, irrespective of who that investor actually is. And we're going to see that at San Albino, and we're going to see that at Eagle Mountain going forward as well. The design of the plant is nearly identical. A couple of components here and there. It's going to be bigger. So San Albino happens to be an off the charts high grade system. We have an average, even the veins are about 17 grams with dilution. The average head grade that we've experienced since inception was just under 8 grams a ton. Eagle Mountain will be just over 1 gram a ton. So the actual plant will be about 10 times as big as San Albino, but it's 10 times as big on basically the same exact design. So our team and operating team has the experience of putting these things together. We'll have opportunities of bringing in used equipment where we have the ability to refurbish in-house within our workshops. We have the expertise to do that. We know what equipment will work better, with stuff that we need new, the stuff that we need used. We'll have the ability to do all that with the integrated broad team that we bring to the table as part of this acquisition as well. Now, I'll go over a little bit about Nicaragua in detail, kind of what we're seeing over in San Albino, about the country and kind of what we think is special about our asset. So there are some operating mines in Nicaragua. The two large-ish, there really aren't like super majors in Nicaragua at all, are Calibre. So they're producing in Nicaragua, I think in the low 200,000 ounces a year, which is just over 50% of the gold production in the country of Nicaragua. They're doing an excellent job managing multiple mines from different areas and then feeding it to a centralized milling location. And it shows you kind of how supportive the government of Nicaragua is for an operation like this. So if you think about this, they were able to get off the ground pretty quickly, be able to integrate these satellites pretty quickly, be able to use this infrastructure that they picked up from B2 Gold, who they acquired this from. We're able to do this in a very, very fast-paced environment. You could not do that without the support of the government. So I think Calibre was actually a very good test case, a very good anecdote to show you the support the government of Nicaragua has to advance these projects. Likewise, there's also a Colombian company called Mineros. So they're that dot up to the top right of the chart over here. They have some Colombian dredging operations, but also in Nicaragua they have a combined business of an in situ mine that they own called Bonanza, and then they have an artisanal reprocessing center called Hemco. That makes up another pretty substantial component of Nicaragua's production. And then we're all the way on the north, right just south of the Honduras border, where we have the San Albino mine, which is a completely different geology than the other folks have in the country. We're in a sedimentary hosted basin. a shale almost, whereas everybody else, you can imagine there's a picture of a volcano on the Nicaraguan flag, so they're in a volcanic hosted environment. Very, very different than what you actually see elsewhere. In fact, there's actually very, very few anecdotes and very few analogs to what we have over at San Albino around the world. One of our directors, Dr. Rael Lipson, just published a technical paper trying to find stuff that kind of looked like San Albino. And one of the things that he pointed out is that while it's we have a little bit of an unusual signature from a geology perspective, but the closest analogs that we have to San Albino are mines that have literally tens of millions of ounces of gold in their inventory. So San Albino is a relatively small scale mine, but it has all the potential as well. Just lastly on San Albino, for those that really aren't familiar with Nicaraguan politics, is that every place has their own level of complexity with politics. Specific about San Albino is that the namesake of the ruling party in Nicaragua are the Sandinistas. So the FSLN, the S stands for Sandinista. The name Sandinista comes from a general named Sandino, who was one of the leaders of a revolution that happened not in the 1970s and the early 1980s. You might have heard the Sandinistas versus the Contras and things like that. But no, Sandino goes back to the 1920s when there was a civil war in Nicaragua. Sandino actually was the former general manager of the San Albino mine. Right, so this namesake of Sandino, in fact, you go down to Managua, the capital city of Nicaragua, it's the General Augusto Sandino International Airport. It was named after him. He has this wonderful silhouette with this really cool hat that he wears. He's an icon within Nicaragua, a very important part of the political party and system and regime over there. Why this becomes important is that the government, and this is whether you're pro-government, anti-government, you're anybody who is a patriot within Nicaragua, actually really is excited that Sandino's mine is up and running for the first time in 90 years. So we have not only political support for economic reasons, we have political support for political reasons. That everybody is super proud that this mine, which was kind of sitting on the shelf for about 95 years, for the first time since then, Mako was able to develop this and turn this into a very successful operation with all the respect that we had for the history, for the environment, for the local population, and for the full government of Nicaragua. So, what exactly is San Albino, and kind of how do we come about? So I spoke about the predecessor of Mako earlier in this presentation before. I think this slide kind of sums up what actually happened. So before Mako, this was a company called Golden Rain Resources. And Golden Rain managed to rediscover San Albino. They had a different interpretation than one of their predecessors had. And in 2009, they got the property and they drilled it and made this rediscovery of the San Albino project. So you can see this chart shows meters drilled, blue being in the San Albino deposit, gold being at a mine that we're currently mining right now called Las Conchitas, and then the maroon being everything else in our 188 square kilometers of ground. So it was a good 40,000 meters of drilling that was put in to delineate what at one point was a 900,000 ounce compliant resource on the asset. And then what happened in 2014? Nothing, like literally nothing. That was actually the first time that the Wexford, the controlling shareholder and an affiliate company, made an investment into Golden Rain, because we actually saw the potential for the geology over here. But the management and the board of the company were myopic, and they basically wanted to go and develop a mine without actually doing any of the work to do it. So there was a period of dormancy for a period of about 4 years. I was trying to merge and acquire the company throughout that entire time, because I recognized that their management and board was making a serious mistake by not advancing this project. It really took till the end of 2018. We merged the company, two predecessors, changed the name to Mako, but it still was somewhat of a dysfunctional company, and it required the management changes that happened in 2019 March 2019, I took over as interim CEO of the company. And then in August 2019, I took over as permanent CEO. And you can see exactly what happened. The second that we had control of this company, second that we were able to bring in capital from our controlling shareholder in 2019 and then 2020 was the last time we raised equity at this company. Think about that for a second. We're a junior mining company, and the last time that we raised equity was in 2020. It's now approaching close to 4 years ago since we did. In fact, we've repurchased a lot of those shares that we've acquired. We've repaid almost all the debt that has come from the mine. We've explored. You could see on the screen right now how much we've explored on this property to invest in internal growth opportunities. But it required that management change to go and basically advance the project. It's not like we're particularly geniuses over here. So we do know what we're doing. We do have like a broad skill and swath. But one thing that we bring to the table is just the ability to focus on the task, the matter at hand, which is to advance these projects into cash flowing mines. And it's something that I think there's some people that do this excellently in this industry, and your investors and the people that are listening to this, by all means, like pay attention to them and invest in them as well. They should be rewarded. But like 90% of the industry is not set up to do this. They basically are there to be in a sewing circle with their friends, to tell them that they have this hobby to be an explorco that just drill a hole. Look what I reported right now, without actually doing anything to turn these into businesses. And it's one of the most frustrating things to be a part of as an investor, where you're looking at these things, especially ones that have potential, and then you see people that just can't get out of their own way because they don't want to invest the capital and the expertise, the time, the heart, the blood, the sweat, the tears that come with advancing these things into production over time. And I'll give you like one last anecdote about this chart, which I think is actually telling over here. So we spoke about the blue, which is San Albino. So the discovery that was there, and then the infill work that we did in 2019, which was acquired before this actually was going to go live as a mine. Look at the gold over at Las Conchitas. Las Conchitas in 2011. So the whole LC11, so Las Conchitas 11-01, like literally the first hole that was put into Las Conchitas wound up hitting 3 meters of 2-ounce material, I think it was 62 gram gold associated with it. 3 meters of 60 grams. When was that hole followed up on? That hole was followed up on in 2019 after the management changes happened. It wasn't because and by the way, that hole that we hit wound up hitting a meter of 373 grams. It's one of the highest gram meter, may actually be the highest gram meter hit that we've had in our entire database over, because we don't really have like a nuggety deposit over at San Albino. But think about the absurdity of this, is that a discovery was made in 2011 that was literally never followed up on because of pure myopia. And you can see what actually happened with the country, with the company. As soon as the management changes happened, as soon as the capital was infused, it was a change. Now, Goldsource is in definitely a different situation in that, like, Eric, Steve, and Giannis and Kevin are extremely competent people. They want Eagle Mountain advanced. They're not the ones that are like preventing this from happening, unlike what happened with Golden Rain. But in terms of the availability of capital, the availability of expertise, and the breadth of expertise to advance it, they were kind of like stuck for reasons not related to them, but they were kind of stuck in a similar fashion. And what I can commit to you on this call, what I can commit to the government of Guyana, was the same thing that I can commit to the government of Nicaragua when we took over the management over in 2019, is that when we make a promise to go and turn this thing into a mine, we have the capability of making sure that promise comes to fruition. And it's something that ordinary junior mining companies just can't do and can't make, but we can, because of everything that I mentioned earlier in this presentation. We have access to capital. We have a mine that's generating a boatload of cash. And then most importantly, we have this really, really deep operating team that is set up to do exactly what the Eagle Mountain development is all about. So a little bit about the geology. We have 188 square kilometers of ground over in San Albino. Every single one of those yellow stars over there are showings. Almost all of them have showings in excess of 10 gram gold. I'm very active on Twitter, so follow me as well. I posted yesterday is like, look, we made like literally another. We don't know the grades yet, but it looks good. We literally made another discovery in our 150th prospect over here, 20 kilometers away from the mine, that eventually is going to wind up having multi-ounce material that is going to be coming and extracting out of it. But we focus kind of on a small area. So that little blob that you see by San Albino, that was the mine. That was what was actually producing 40,000 ounces a year. You see areas in those little red dots. That's Las Conchitas. That's the second mine that we have up and running right now. We started production on that in August of last year. But all along this system, we see the same thing, whether you're at the historic El Golfo mine to the southwest, all the way up to the La Segoviana prospects, 23 kilometers to the north of the mine. Frankly, the system goes off our don't get any ideas, but the system goes off our property literally in all directions across this 188 square kilometer land package. Now, in terms of what the ore body actually looks like, these are shallow dipping systems. And this is kind of what plays with people's minds a little bit. And like, oh, San Albino doesn't have really a large resource, which is true. At one point, Golden Rain had a 900,000 ounce resource. It was just based on BS, right? So we had to go in, do the work, have a geologically controlled model, which inevitably made it a relatively small deposit when all was said and done. That is not to say that this is going to be like a large inventory of gold, but our main approach of this was to mine. We weren't here to try to attract other investors to come in because we had this large splashy resource. We had to make sure that we had the technical data that was sufficient for us to mine this effectively. I could say right now that the resource that we put out, everything that we've put out is positively reconciled. I think from life of mine, we're now plus 13% from what we put out. But more importantly, we really focused on a very small area of the deposit. There's not a single drill hole in this entire database that we have. I guess we have like a couple of deep holes over in San Albino, which shows continuity, but we don't have a single hole over at Las Conchitas, kind of in that middle, that's deeper than 100 meters. And the one thing about orogenic ore bodies is like the old wives' tale, if you will, that exists over there is that these vein systems tend to go down to the center of the earth, and it's true, right? So it's like these mesothermal systems, these orogenic systems, really do have dip potential that can be literally measured in the kilometers when all is said and done. So once we actually get serious and focus on the underground, the way that I like to say it is take the resource that we have, and if we can prove that the underground is economic, you put a zero on it. It's like it really does have the potential to be an order of magnitude larger than anything that we can extract from an open pit for very obvious reasons. On this particular like modified long section that you see over here is that there's a limit to how deep these pits can go before they go into the side of a hill, and then it just no longer becomes economic. It's not because the ore body stops. It's just because it's like, why am I going to be moving that waste when I can just go underground and it's going to be more cost effective to do this? We just haven't focused on that drilling in order to prove up the underground resource because there was so many opportunities to go and prove out these open pits. And with that, I mean, that's basically the Mako story. I mean, just to sum it up, it's like we have all the exploration potential. We probably our most difficult challenge is to kind of organize the data to make sure that we have the ability to go and target our prospects in some coherent fashion. So we spend the most time in our most advanced projects, but like we are looking everywhere on our property on the 188 square kilometers, and literally everything about this property is indicating exactly what one of our directors, Dr. Rael Lipson, is saying, is that these ore bodies tend not to be in situations where the actual inventory is going to be less than tens of millions of ounces when all is said and done. It's not to say that we're ever going to have a resource that large, but in terms of system potential and what's there, it is there in droves. But it plays with investors' minds a little bit in that, given the fact that we're never going to be reporting a large resource, people have a difficulty in putting a valuation on Mako. So we tell people, it's like, look, this system has the potential to be big, but it's never going to have a large resource. Is that, well, how am I going to value you as an investor? One of the things that we bring to the table with this Goldsource acquisition is that we actually have an ore body that is more conventional in the aspect that you can actually prove out a relatively large ore body just because of the nature of the geology. For us over at San Albino, it's the nature of the beast. If you want to get that technical data correct, you're going to do one of two things. You're either going to have a small resource, or you're going to blow your brains out with drilling before you can actually have a large one. Or I guess the third one is you can do what our predecessor company did, which is just make up the resource by having uncontrolled geology in terms of how it was measured and analyzed and disseminated to the public. Which, by the way, is not a unique aspect of this industry. That's why I tend to think that in situ ounce valuation is kind of like a silly metric in this industry, just because there's so many people that are incented to just make stuff up because they don't have real geological controls on their model, especially for high grade narrow vein systems like we have over at San Albino. So to wrap it up, we did this over at San Albino. We're in the process of doing a merger with Goldsource, and once that's complete, it's going to be the same thing. Do these low capital intensity, scalable projects, develop a platform, and just like Wexford did with Diamondback, you do it again and again and again until eventually you have size and scale to be one of the biggest mining companies in the world.
I think to start, I want to touch on one point which is slightly unique with you guys. I mean, you have Wexford here. They've built multi-billion-dollar large companies. Can you explain a little bit how Wexford actually interacted in the Permian Basin story? What was your actually role in that investment?
Well, my specific role was actually very, very easy. Is that I had nothing to do with it other than I sat next to the people that did, right? So my role was to basically eavesdrop on what they were doing. So this was a Wexford thing, not an Akiba thing. That being said, I literally sat right next to the former chairman of Diamondback, Steve West, who's now just a director, and then I sat a few seats away from Kees van Hoff, who was an analyst over at Wexford back in 2012 and is now the president and CFO of Diamondback, and literally one of the most successful and well-respected finance executives in the entire energy space, and well-deserved for that as well. So how Wexford got involved with Diamondback is actually kind of similar, is that Chuck, so Charles Davidson, was an energy investor in various forms going back since his Goldman Sachs days in the 1970s. So he had a lot of expertise in investing in public companies and private companies and developing things himself. And he really was one of the thought leaders in terms of how horizontal drilling was going to change the world. So he saw what was going on with drilling technology, saw what was going on in the Permian, saw what was going on with some of his competitors over there, and he picked up a bunch of ground, I think in 2005. And you know what? It really wasn't all that successful the first 4 years, because he was trying to de-risk it, work out the kinks, actually very, very similar things to Mako in that regard. Eventually, management needed to be changed, and Wexford brought in a guy named Travis Stice, who is an excellent operator from a previous company that I work with. I think that was back in 2010. Got the operations working under control. When Diamondback went public, it was producing nothing. I mean, it was just 1,000 barrels of oil equivalent a day. It had some undeveloped acreage over time. And what it really needed to do, it needed to make some acquisitions to kind of like heft up the resource base over here. And then during the U.S. Super Bowl, it was announced their largest acquisition ever, which was buying their neighbor Endeavor for what's now over $30 billion US. That deal is scheduled to close, I guess, in the next few months. But at that point in time, Diamondback's going to be the third biggest player in the Permian, behind like super majors over there, and it just shows you the trajectory of that from a standing start to zero, going through a lot of operational challenges that need to be worked out. You kind of learn by mistakes, right? So you go and you figure it out. You get operators in there that are going to be managing the business well, and then once everything is de-risked, then you'll have the ability to go and grow. And Diamondback was able to do just that.
All right, so now we are having Steve Parsons on here from Goldsource, the other side of the coin. So first of all, Steve, could you introduce yourself to our investors and let them know who you are and your background and how you came to work with Goldsource?
Thanks, Gorm. Yeah. Well, I've had a sort of almost 30 years in mining. started as a mining engineer early in my career, really with a focus on mining and more mineral processing actually, and focusing on gold projects, working in gold plants around Canada. Did that for quite a few years, and then but really the last 15 years for me, prior to joining and going back onto the corporate side, was in capital markets. I worked about 15 years with various Canadian banks, investment dealers in Canada, covering the mining sector. Writing research on various sort of base metals and gold projects, and traveling around the world looking at and doing due diligence on many gold projects. So I've seen a lot over the years, from juniors to senior gold miners. I guess at the end I was covering the senior gold miners. And then I went back onto the corporate side. 2017, worked with Yamana Gold as one of their SVPs, and then joined Goldsource in 2020. Sort of right in the middle of COVID, I guess, or right as it was ramping up. So that was an interesting time to join.
Yeah. And I think for people, I mean, obviously, just looking at the equity price, the deal has done very well. But can you give some background, because you were proving out the deposit? It's in Guyana. It's one of these jurisdictions that are clearly going to great places, but there's some skepticism around it. We had the Venezuela incident a couple of months back before the transaction, and the share price had come down. Can you explain the situation going into announcing this transaction with Mako, and the kind of rationale before we knew the share price was going to react very positively to it in that situation?
Yeah, I mean, we were caught up with a lot of other junior gold explorers. I would sort of even more specifically say late stage gold explorers, where we'd made our discovery, we'd sort of expanded the resource. Of course, there's potential to keep expanding it, but our frequency of news flow was really slowing down, and that was partly because we'd already been through our discovery, right? And we weren't putting out exploration news releases every month, and partly because as we were going through this cycle with explorers, obviously that space was really beaten up, and share prices of us and our peers were trading down. So we were sort of managing dilution. So it was a bit of a race between, generating impactful news and managing dilution. And we just weren't putting out a lot of news on the exploration front, because we'd made our discoveries. We were also transitioning to engineering, and that's pretty slow as far as news goes. And we were, caught up in the sell-off in gold shares, and we were sort of managing dilution. So we were sort of raising a little bit of money every year, just enough to sort of carry on with a little bit of exploration, but mostly do the engineering. And that's not a great place to be, because you for a company like us, you either do one or the other. You're either exploring or you're doing the engineering. And if you're doing the engineering, which is what we were, it's not newsy, right? It's not newsy until it is. And for us, the event was the PEA, and we published the PEA in January, the results of the PEA in January. And that's when things started to turn for us. So because then we were able to contextualize, or help investors contextualize with the PEA what the production was going to be, or what we estimate the production to be, what we estimate the total cash cost to be, all-in sustaining costs, what the CapEx could look like. And that's kind of for us where the rubber hit the road, is demonstrating this is indeed a low CapEx intensity project, which is what we've been saying for years. We just needed to prove it initially with the PEA. And that came at a great time, of course, for us, because then gold prices also started to move, a couple months after that. So we were sort of caught up in a very slow news cycle, without a lot of exploration news, mainly quiet on the engineering front, and then sort of, this year was of course in January was the big year with the PEA, and I think for us, it's on the surface it's not a high grade project, but I wouldn't say low grade either, but it's a good grade project. And I say good grade rather than low grade because it translates to high margins, right? So for us, there's people refer to high grade and low grade. I prefer to say good grade and bad grade, and this is a good grade project because it's at the gold is at surface. It's very soft to keep. I probably talked about that. It's going through, so you can free dig a lot of the gold, and it translates to sort of particularly strong margins when you're in phase one, which is the saprolite project. So that manifested with strong economics in the PEA, and for us, that's where we were able to sort of get some traction again with investors and get out there and talk about this PEA. starting in January, and then of course, into March with a pickup in the gold prices. We really were able to get some traction. Interestingly, if I may as well, I would say the last couple of years, not only did we have a sort of a slower news cycle, obviously investors were concerned about late stage projects that were going to be coming out with a study where there was going to be a capex number and a headline capex number. That's sort of what was the focus, and consequently, a lot of explorers like us just turned back to exploration and were trying to make their projects bigger, and that was partly to offset the inflationary pressures because capex was going up, then the project needs to be bigger. And our contention was, well, of course we could do that. We could keep drilling and keep diluting the company, or we can focus on demonstrating this is an executable project. And our view was, if gold price is going to go higher, or even if it stays where it was, we have an executable project with which we believe is strong economics. So let's just focus on the engineering, and let's focus on demonstrating an executable, quote unquote, high quality project, and there will be appetite for that. There will be an investor appetite for that, and we believe there would be corporate appetite for that, because when you move into a strong gold cycle, at the end of the day, of course, people like bigger, but really, I think what it boils down to is what people want is a project that they can execute on, whether it's because the permitting is favorable, the features of the project are favorable, you can fast track it in some ways, it's shallow, whatever it is, you can get into production relatively quickly. Metallurgy is good, right? So we checked a lot of these boxes. We had what we thought was an executable project that could be fast tracked, and that would resonate at the right time. And I think but I think it's come towards us. And now there is sort of a broader appetite for, executable projects that have strong, characteristics that we'd sort of call them high quality, in that they can be permitted and you can get them into production relatively quickly.
Yeah, and as we understand from the conversation with both Frank and Jesse, both guys have a kind of a history with the project. They've done for many years. So it's and as we know, both are very capable, especially Jesse's group can build projects like this without issue, and so it's very synergistic, right? It's just a very, very excellently structured deal. All right, so we're here with Jesse Muñoz, the CEO of Mako Mining, and he has had a very successful career as a mine builder and commissioner. So we would like to learn about him and his firm and how he's involved with Mako.
Well, our story goes back with Mako Mining and the people that are involved with the Kiva Eastman, myself. We met 2008, 2009. We are building a project in Mexico. We've saw the need for our expertise. I've had a construction team, building team, EPCM company that we build mines in all the Americas, heavily in Latin America. We were doing a lot of mine building. So we saw the need that to have an expertise with a group that could build mines and commission the mines and actually train people and then go to the next mine. And that's how this whole thing started back 2008, 2009.
So I think it would be interesting if you could pick, for example, Santa Elena. I believe you were responsible with building, and also your connection with Eric Fear at Silvercrest and building these mines. Could you explain from start to finish how you were involved and made that a success?
Sure. Eric Fear, I know him when he kind of came into Mexico looking for a project to build. Santa Elena came to his plan of working in Mexico. When I got brought in, there was the funding was trying to get together for Santa Elena. Some of the estimates for the capex for the was coming in pretty high. That's when I jumped in. I came in, and I could see that we could build that a processing plant for that type of ore deposit at that time. And it was more realistic than what they were saying. We came in probably 40-50% lower on cost. We signed a deal. to build the Santa Elena mine. And the rest is history. When everything we came in, I think under budget and on schedule. The whole project was to come in with a processing plant that would run for 2 to 3 years eventually, and then we'll go underground, which is almost the same thing we're doing at San Albino. We're open that deposit as an open pit. We've understanding the geology and the metallurgy of that project, and then our intention is to be going underground here in the very near future. That was the whole story with Santa Elena. We built it, commissioned it, and that plant was a miracle plant that we designed and built for that, specifically for that deposit, and worked out really well. I've known Eric since 2008, 2009. Yes.
Yeah, and obviously now you're coming together here with the acquisition and merger here, so it's very interesting. All right, so we're here with Frank Powell, the main geologist over at Mako, and I guess Frank, could you just start off telling us who you are and how you got involved with the company, and a bit more about your career prior to Mako as well?
Sure. I started with Mako about 5 years ago. My background, I worked for Placer Dome in a number of senior positions for about 15 years till they got taken over by Barrick. My involvement was mostly on advanced projects, really all over the world. I worked in Africa. I was in charge of exploration in Africa. We were also looking for platinum. And we made a number of discoveries that we took all the way through to feasibility, ready to bring into production. So that's kind of my area of expertise, although I've been involved with exploration, at all different levels, from grassroots to actually developing the project and bringing it into production. The geologic models. I'll run, these are just disclaimers. But I share the project with Soham Pudar, who's local, or his background is Serbian. He lives in Canada, and he's been involved with the project for the last 15 years. So we have kind of the best of both worlds, that we have the experience, from outside, and then the local experience where he knows the project like the back of his hand. Excellent exploration geologist. Maybe carrying on a little bit more on the team, because for us, that's one of the critical things. A lot of people talk about how important people are, but here we really see that as one of the critical things to our success. And what we've done is developed a local staff of geologists and helpers all the way through, and we really focus on trying to develop the local talent. Instead of bringing in people from outside, we really focus on developing as many people as we can locally, and then bringing them up through the organization. And that helps us a lot because it gives continuity to the project all the way from exploration to production. In fact, this year we're going to be celebrating a 15-year anniversary on the project, and we have 6 geologists that have been 10 to 15 years on the project that are still with us, and they know, we're covering 188 square kilometers, so it's really helpful to have people that know not only the local geology, but also the people and the ability to access the property. So that's a real plus for us. And just recently, our Cleopatra has become our country manager, and she went through that process where she started off, out in the field collecting samples with the guys, learning how to core log. So she knows the process all the way through, and now she's become a country manager. And we have a number of staff members that are also have been in with the project 12 to 15 years. So for us, that's a real important part of our success here.
I wanted to crystallize for people here, because you don't have any official coverage here, but just crystallize the napkin maths. What's the expected performance this year? Could you just kind of give the all-in sustaining cost, the production level for the remainder of the year, and we can kind of extrapolate that to give people a sense of how the company's cash flows are currently being valued.
Yeah, so I mean, Q4 was the last financial report that we put out. We're actually it's such a weird thing about being a venture exchange listed company is that you put out your Q4 in April and then your Q1 in May, right? So you're actually going to see 2 quarters very, very quickly. We'll put out an operating update actually probably before you're gonna file this presentation. So we're filming this on Friday the 19th. We're going to be putting out an ops update on Monday the 22nd, I think. So with Q4, we had sales of 13,400 ounces of gold, but that was flattered a bit because we had it was like a long story about we had 2,100 ounces that should have been sold in Q3 that wound up getting sold in Q4. There was like a 7-week screw up at one of our external refineries that caused that issue. So from a revenue perspective, albeit at substantially lower gold prices, I think we were doing like about $1,970 for the quarter. That $26 million of revenue should have actually been a little bit lower without those 2,100 ounces because we only produced about 11,500. And then the pre-tax cash flow coming from the mine, which was just under $17 million at 1970 gold, also should have been commensurately lower without those 2,100 ounces of gold. So factor that into the equation. That being said, because of like weird inventory accounting and on how we do this, the AISC, which we reported, which was in the low 800s, was not really all that much affected at all by those 2,100 ounces. So we are operating right now in there were some attributes about Q4, which were even with let's call it the 11,300 ounces of production that we had, that was a little bit elevated from what we normally do. So we're having a little bit more of a normalized quarter of about 10,000 ounces of production in Q1, but somewhat higher gold prices. We're not Q1. The average gold price was still below 2,100. It wasn't the 2380 that we have this morning. But even with that, the AISC is pretty close. We're sub 1,000 like for the mine. I mean, that's why. And I think for people that actually really pay attention to what AISC is, a lot of these numbers are frankly made up. In terms of how they come about. So you really do need to look at this in context of what the actual cash flow coming from the mine is looking like. So think about when I say $17 million of pre-tax cash flow from Q4, we repaid $7.1 million of debt. I think we put in our financial 6.9, but there was $200,000 that went to a derivative settlement. So it was actually $7.1 million of debt repayment. We reduced our payable balance by $5.5 million for the quarter. We increased our cash balance by $1 million. We repurchased like $500,000 worth of stock. We paid like $1.5 million in taxes. We invested like a couple $1 million in capex and exploration actually more than that, go close to $3 million of capex and exploration for the quarter. You could see exactly where the cash is going. And this in the last 4 months, we've repurchased almost, I think since our NCIB actually has occurred, we've probably repurchased close to 1 million shares so far. It's like the cash coming from San Albino is mind-boggling, and it takes like an investor to take a step back because I say, oh, we're a 40,000 ounce a year producer. It's like, oh, well, that's kind of small. That's kind of like maybe a hobby mine. But then you actually take a step back in this kind of golden price environment, and what that actually means, it's like it really does like change the entire nature of what the asset is about.
Yeah. So let's just break it down and let's try to be very concise. 10 to say 12,000 ounces per quarter is where you expect to do for the remainder of the year. So on an annual basis, that will be 45,000 ounces what you expect to produce. At 1970 gold, let's say that you had an all 850 cash cost or all-in sustaining cost, whatever. I guess you made probably not including those 2,000 extra ounces. You made maybe 1,100 per ounce or something like that.
Sure.
In operating cash flow. So one would extrapolate that, then you're making at that gold price per year. Let's see if we just go with 40,000 ounces. I mean, 44, like $50 million bucks.
That'd be 40 million, right?
Exactly, and then and you expect costs to be static. I mean, you don't expect costs to move much throughout the year.
Our costs, from a consumable perspective, actually not much at all. Like everything is pretty much stable. Like so, our mining costs were pretty flat. For those that are actually like really go into the details of financial statements, you'll see that mine costs went up from like around 6 million for the quarter to like 9 million and change for the quarter. That's an accounting issue, right? So because there's a lot of attributable cost associated with work in process, because we sold more, it got pushed onto the balance sheet. If you actually looked at unit cash costs for mining and processing, there was very, very little movement from Q3 to Q4 and very, very little movement from Q4 to Q1. So everything from a unit perspective is basically static. Obviously, that can change. We did definitely experience inflation in late 2022 and early 2023, but really since that time, it's been pretty stable. Where costs actually come into play is if you think about what we are, is that we're a very high strip mine. It's like we probably have a strip ratio in the mid to high 20s. Now, I've always gotten this comment about Mako. Oh my God, you got like a high strip. That must really impact it. It doesn't. Like it doesn't really matter when you're talking about grades that are coming from our mine in that regard. With one caveat, if you're talking about like a 25 to 31 strip, you're from a mining perspective, you're effectively a waste moving operation. So the ore is going to go into the process plant, but the real meat of the costs is your mining. And just logistically, the place where you put your waste is going to have a material impact for how high your mining costs are going. So we're always in this juggling mode, is that we got to find waste dumps that are closer and closer to the deposits that we're mining. And we've been very successful to date of doing deals, getting permits, moving our waste dumps closer so that mining unit costs are basically the same. To the extent that we need to move things further, that's kind of where you're going to have like cost escalations going up. So we're not really all that impacted by like strip ratio. So whether we're at 25 or 35 really doesn't really matter. We are impacted by haulage distance. And that's something that we've had. We've actually done an extraordinary logistics, community relations, because we have to negotiate with landowners and things like that to date. But in terms of like risks for mining costs to go up, that's kind of where I would put a key risk, is that let's say in a year and a half where we have a different pit over here, can we actually get a waste dump right by there? That's always going to be something that we need to be deft at how we negotiate.
Right. And kind of the leverage to gold price is $100 in gold would give you, free, let's say, because taxes go up and royalties and so on, it gives you $3 million extra. So from 1970 run rate, if we extrapolate, you would make, on a quarterly basis, that would be $3-4 million more since then, or per quarter.
Yeah,
and I'm excluding the extra ounces as well.
Right, and it's kind of like an important point over here. So we are a producer, so like high gold prices are good for us. Like I think people kind of lose that. I think the more important thing about this is that, and I don't think this is anything specific to the mining industry or junior mining investing industry, but I think because we are public companies, people have a frame of reference of stock price in their mind. It's like, oh, Mako has gone up from $1.50 to $3, and therefore I've missed this opportunity. I could tell you right now, Mako at $3 is cheaper than Mako at $1.50 for a lot of different reasons. A large portion of that is gold price in general.
Yeah, and it's the risk, but let's crystallize that. That's share price, but what enterprise value? Enterprise value post-transaction in American dollars. People can relate the cash flow profile here. That's about 190 million American, I think.
Yeah, something like that.
80 million shares, 3.2, that's 240, 250 million Canadian times 0.73 or whatever. Yep. It's like 180. So you're trading at, so what was that? This on a yearly basis, at the current or at the gold price, like say 2000, you were trading at a fourth in operating cash flow to enterprise value, and that's net debt as well. Right. So I mean,
by the way, we also reported, like, and think about this for a junior mining company, we reported $9.5 million US of net income for Q4, 1 quarter, right? So you can actually start looking at us from a PE perspective as well.
You definitely could. Right. So it's very good, and you have this excellent team that can build mines. You're going to execute on that, but that gives people a sense of the valuation, which I think is still very attractive. That's why we're speaking to you today, obviously. I want to speak a little bit about the kind of the thinking around. You have this optionality to expand at San Albino. It's cheap. Can you tell us about that and how that kind of slots into the vision for the asset in the coming years?
Yeah. So when we set out our 2019 objectives, our 3-stage approach, get a 500 ton per day operation up and running, and then use the cash flow from this to put us into a position to make an expansion to 1,000 tons a day. I think in 2019 pre-pandemic, I said by the end of 2022, like we're now in 2024 about this, to do that. In fact, all the civil works for the plant were laid down such that it's ready to go for 1,000 tons a day with very, very limited capex to do that. It's going to be less than $4 million to make that expansion case. And then the third objective was to prove that this is an orogenic gold mining camp. We certainly did 1 and 3. The 2, which is really to the point of your question, it's like, where are we going to do the expansion? So there's a very simple the pandemic obviously pushed everything back by 9 months by doing it that way. The plant got up and running probably about 4 months behind the original schedule, but kind of like with everything associated with it, it's probably like a 9-month pushback because of the pandemic. And then in 2022, kind of had an interesting series of events. Is that we were having some metallurgical difficulties at the beginning of the year. So our cash flow was not great at the beginning of 2022. And then things actually changed. We actually fixed a lot of the metallurgical issues for the plant. It was everything around the plant was behaving exactly as designed. In fact, that's kind of when we started our discussions with Goldsource at the back of the day, because I thought it was the appropriate time for us to be looking externally after we kind of like fixed our own house. And then in Q3 of 2022, we were exploring, albeit using exclusively core rigs. So we're using RC right now, so it's a little bit cheaper, even though a similar amount of data. But just with 7 core rigs, we were spending, pushing close to an annualized run rate of over $15 million a year, just through the cash flow from the mine. Again, the last time we raised equity was almost 4 years ago at the end of 2022. And then in October of 2022, the U.S. government put some sanctions on the gold mining industry in Nicaragua, which kind of like we were taken aback by this. Now, it turned out it actually didn't really have all that much of an impact on operations, but it definitely did have an impact on what our willingness was to spend at that time. So we down throttled from this $15 million a year run rate to what became 5. We're now ramping up to about 10, albeit in a smarter way. So the 10 is basically from a data perspective equivalent to the 15 that we were spending before. But that ramp down and now ramp back up has now pushed our exploration requirements to make that expansion case behind where we originally were in 2019. Which, by the way, I get criticisms about this, like, Mako said in 2019 that you were going to be producing 1,000 tons a day in 2022. Why aren't you doing that right now? So a couple of things. One, I change when the facts change, right? So like, obviously we had some exogenous things with the pandemic, but just like Diamondback, we are ingrained with capital discipline in everything that we do, in our DNA. And when Diamondback was when oil prices were in the crapper during the pandemic, they were one of the thought leaders about reducing capex in the industry. And then everybody kind of like copied Diamondback after that. And the entire shale patch right now in the United States is this capital disciplined industry. And that's why you actually see these cash flows growing, is that we have a reflexive approach to data that's put in front of us. If there's a reason for us to down throttle, whether it's operational, geopolitical, both of those were true in 2022, we will make adjustments and decisions to do things that are the best for the short and long term of the company. And now that we see we're back in the bull market, we have no issues of reinvesting in exploration at this point in time. But in terms of like from a schedule perspective on where we were at 1,000 tons a day, we're definitely behind. I said at the end of 2022. Now what the implications are from potential is like we now know where we're going to be finding those ounces. We know we're starting to get a lot more serious about the underground this year. So we kind of see all these touch points. You know what? The resource is still there. You know what? The civil works were still put into the plant. It was less than $4 million 2 years ago. It's still less than $4 million because all of the things that have potential CapEx risk associated with it have been taken off the table. So we still have all the optionality in the world to do the expansion, but the limiting step is making sure that we have a large sustainable resource that can justify milling at that rate. Now, that being said, we did make a decision to optimize some of the way that the plant was running. So we actually consistently mill at 600 tons a day right now. So instead of doing 100% expansion, we did 20. And looking back, that was the prudent thing to do. I knew it at the time. Looking back with actually what actually happened and how things transpired, zero regrets in terms of making that decision.
But to crystallize, this is an optionality. The capital cost is negligible. Actually, at least on the processing side, it's negligible, but the exploration is significant. You're going to have to deploy quite a bit of money there. It's going to take mostly time. That's the ingredient. But the optionality is there. One could infer that the economic output in terms of cash flows can expand by 70 to 100%, depending on how much cost you could reduce on volume, but probably like 70%. So from what we spoke about previously to something in 3 years from now, it could become 70% more productive in terms of generating cash.
Yeah, I mean,
would that be a fair characterization?
Yeah. Back to the envelope. I don't think it's not like you're going to have like major synergies on the mining side, right? So it's just more stuff on a contract, maybe a little bit on some overhead, but like I think mining is going to be basically flat from a unit perspective. Processing there will be. So we run depending on how you count, like a 500 to 600 ton per day mill. We have like complicated metallurgy. It's like this is not an easy mine. Mineralogy is nothing easy about Sanofi. In fact, I'm looking forward to Eagle Mountain, which actually has like a lot more pristine and easy metallurgy associated with it. So our plant has a lot of kit associated with it and a lot of consumables associated with it to deal with some of those issues. But even with its small scale, to put this in perspective, we're now running this as a fine-tuned machine, and as a fine-tuned machine, our unit processing costs are still $65 a ton, which is on the high end of the spectrum, the industry. But it's not because of an inefficiency, with the exception of scale. This goes up to 1,000 tons a day. Yeah, I think you're going to probably wind up saving just on a unit cost on processing at least $10. So you figure the incremental ounces will be a third cheaper from a processing perspective, 25% cheaper from a processing perspective, and then the overhead. There's very little additional overhead that you need to be running at that level. So all of that's bottom line material. So yeah, no, on an incremental ounce basis, you'll probably see, if I had to pick a number, again, total back of the envelope, I would say the incremental ounces will probably be 10 to 15% cheaper if we made that expansion case.
Yeah, that probably equates to somewhere around there. So that's very good. People can know this asset has legs, right? And that's just enough for you 4-year time frame. The most important thing for investors is that you are able to outpace the guys mining, and doing so quite significantly, and finding new resources that's mineable. Because as we know, I mean, Q4 mining was extremely good. You produced $8 million of operating cash flow on just below 600 tons per day, but you have the ability to quite cheaply expand to 1,000 tons per day or just above that. So my question is to you, what kind of time frame have you set out for yourself to be able to get the mineral inventory to a place where that's possible? It's possible for you to actually make the expansion decision and ramp up mining to almost twice the daily throughput. And what are the main reasons for you believing that you're able to do so?
Yeah, we prioritize our exploration on 3 categories. So I talked about a pipeline of projects. So the very highest priority is expanding where we have already planned pits. So we're in the process of expanding that with the mine and doing additional infill drilling. Then outside of that, areas that we haven't drilled but are within the pit that can be brought into production very quickly. We've got a program actually in the south where we've had some some pretty good results. And then the third area is within that area, very close and on that concession, that we can bring additional resources into production, which will require a little bit longer time frame because those will require an adjustment in the permit, although they're still on the project area. And then the fourth objective is these regional targets. So what we've planned is we've lined up a number of targets that right now we're talking to the landowners, getting the permission, go in and do a very quick RC drilling program. So I identify resources as quickly as possible, or let's say potential resources. So we're targeting to drill at least 6 or 7 of those areas that we can say, all right, these are the whatever 2 or 3 or 4 highest priorities, and then bring those as quickly as possible into resources. So the highest priorities are the ones that are closest to the current mill, and then outside of that area, we have a number of projects that we're advancing. So at the same time, we're trying to meet all of the objectives that we can. Ramping up to 1,000 tons per day, it just depends on being able to have multiple operating phases. So the more that we can find in one area, that gives us the more flexibility that we're able to do that ramp up. In some ways, we've taken a little bit of, how do I say it the right way, pressure off of that ramp up because it's kind of a critical thing. Right now, we're an extremely profitable operation, and we're doing it at the right level. So once we have enough resources that we're able to justify that, identified, that's the timing to do it. But if we ramp up prior to that, you know, it makes it much more challenging. I know you want more specific answer.
No, but it makes sense. It makes sense. I think what I wanted to ask regarding RC drilling, I mean, in terms of getting orientation of the veins and so on, because it's a very tricky business here. You have to be very precise, and you've done a very good job modeling the resources previously. If you over rely on RC, do you think that the reconciliation will be as good, or what's the evidence so far that it might work? Because if it does work, great. You decrease the cost, and you increase the volume of drilling per time unit as well.
Yeah, you know, it's funny because when I actually first started, before we put together the resource, we wanted to do a fair bit of oriented core, which you can also do on RC. You can do with a sonic to go down. And but then when I went out in the pit and I looked at the outcomes of the vein, or what we had exposed, you could get almost any orientation you want, because that vein, you know, it'll flexure in a number of directions. So if you just get one intersect on that and you say it's going like this, well, next to it it's going a different direction. So when I saw that, I said, no, the best thing to do is get as many intersects into that vein, because now we have not only the morphology, but we also have the grade distribution. So RC drilling allows us to do that because we're able to do a lot more drilling. Yes, you get a little bit more dilution, and we're in the process of actually taking a look at that, because we've got one area where we've mined it. We did a lot of RC drilling. We also have diamond drilling, so we can compare what would our resource prediction look like just using RC drilling, and how would that compare to what we actually mined and took out of the ground. So that's one of the things that's a work in progress. But to date, using it for confirmation drilling has been fantastic. And those two areas, San Pablo and Mina Francisco, we used it extensively before we started mining because we wanted to confirm that it was there, and it worked out. It worked out very well. Yeah.
And then to summarize, I think it's difficult to predict when you're able to comfortably make the decision to ramp up. But say this time next year, what would future, or what would you want to see the exploration work at San Albino in 1 year from now, approximately? What would have been a success
Yeah.
for you?
Well, my objective or my plan, and we always it's important for us to always have very clear objectives, and all of our guys are aware of our objectives. Is that we're expanding the resources at San Albino and Las Conchitas, and we make a discovery outside of the area. And I'm targeting actually multiple discoveries. So a discovery would be defined as a mineable grade over mineable width, and at least 3 drill holes that you're able to infer a size.
Okay. And in terms of resource expansion at Las Conchitas and San Albino, by how many factors do you think you can outpace the depletion at which it's being mined in a year's time frame?
Yeah,
Maybe you can give me a range.
that's a key question.
200,000 tons will be mined.
And it's always hard for a geologist to pin down. The biggest thing that we're looking at is, and I think you said earlier, there's no issue on finding, number of ounces. The challenge is how quickly you find it. So we're trying to accelerate that process. And one of the things that's really going to help us is going underground and having exit. I'm thinking in Spanish, having success in underground operations, because what that does is a lot of our resources are in the underground right now, but it's slowing us down at the mill because we're relying completely on the open pit. So by bringing in those underground areas, that's going to buy us more time to deliver on the exploration, and finding and bringing those into production. So we're closely involved in that underground development program, because that will really help us, with the time issue.
And I want to ask, I mean, just looking at San Albino, you've now reached a very profitable throughput level, like just below 600 tons per day. You're making good money here. We saw a Q4. And I want to kind of pick your brains on your perspective, because we just spoke with Frank. He gave his opinion on the exploration that needs to be done to be able to increase volume. From an operational and development point of view, I think specifically from the underground mining, could you give some comments on what you think there? I mean, what kind of costs do you think you will end up seeing, and could you just give your vision of how an increase in volume will unfold from an operational point of view in the coming years?
Yes, sure. I really do believe this is very unique. Like I said, we're probably the highest grade open pit mine that I ever worked in my 30-year career. And not that it's the first time I've had the opportunity to do it. And other places where we've had deposits like this, and a lot of people say no, that cannot be done because of grade control. And I always felt that having the right mining contractor and having the right geologists out there, you could do a high grade underground deposit as an open pit to a certain depth and a certain level. And then once you meet that, then you go underground. And this deposit in San Albino is very particular, where you need to have, because you have some preg-robbing ore and stuff like that. So you got to have like 4 or 5 different fronts always, so you could be blending and mixing ore materials, so to lower your preg-robbing possibilities or capabilities, and you build a plan to be able to cope with that. So it's my plan, or our plan moving forward, is that to bring in the underground very quickly and start supplementing. Maybe we can bringing in so much material from underground versus open pit. They're always going to be work. We're always going to have open pits and underground. This is not possible that you have a 10-year mine life. You probably always going to have 3 years ahead of you, 5 years ahead of you, but for the next 30, 40 years, right? Because it's very important that you do infill drilling as you're mining. Even so, you're doing drilling for exploration, and then you go infill drilling into confirmation, and even on production, you have an infill drill in front of you all the time, drilling for operations. And all my mine people and my grade control people, they live and die by that drill, and 3 months ahead of them all the time. So we can accommodate, and then we have a very active personnel in the mining department. They can react and they can adjust their mine plan accordingly. If we see a vein that's going into a diminishing a vein someplace, they need to change the mine plan. They can change the mine plan in a very short period of time, and always chasing grade as we go. And if anybody can look at the public information on the San Albino mine in Nicaragua, you'll see it's a very, very meticulous pit. That's an open pit. It's been mined very diligently. We're doing concurrent reforestation as we're moving. So very quickly, as soon as you know that you're done with that deposit, it may continue deeply, but you're going to go underground after it. Why not reforest the top, right? So we're always doing concurrent reforestation and everything of this project, knowing that we're going to go underground to get the rest, the economical ore that still remains.
Yeah, it's a very work intensive operation. Yeah, a lot of drilling, a lot of planning, and you have to be on your A game all the time to maintain this mega accuracy that you've showcased operationally in the last couple of months here.
Part of the deal with that, we've actually made our own mine contractor. We chose a person that had a lot of experience in equipment. We made him a mining contractor. So because it is not just producing tons, it's actually economical tons. Without grade, you're not going to get paid. So this contractor that we have, his expertise comes with us. We made him. We told him how to mine. He's been there from day one, and he's been an excellent person to work with. So we mine a little bit different. There's always a geologist or two in the pit, always telling the equipment operator, where to cut, where you take a bucket of waste, where to take a bucket of hanging wall football. So this grade control becomes a very important part of this mine at the San Albino project. Grade control is the key here, and even our reconciliation shows how we're way within the industry standards for reconciliation, especially on a high grade pit like the one we operate.
Yeah, I mean, although the nature of it is very work intensive, do you think that you could see this operation being as effectively ramped up to just about 1,000 tons per day in 3 years from now? Is that something you can envision taking place?
Yes,
or is it going to take more time, you think?
Especially a lot of people tell me, Jesse, 500, 600, 1,000 tons a day. I said, yeah, but at the end of the day, it's all economics, right? If 700 tons a day is giving me the millions of dollars I need per month, who cares? Here you're doing it, mining 1 gram materials on a heap leach, and I'm doing it over here with 700 tons a day, right? So at the end of the day, is the dollar is the one that drives. So if you have a really good money in your books, at the end of the day, that's what counts.
And we're certainly seeing that. You're making. I can't think of another example of that kind of throughput with that kind of cash flow generation. The margin per ounce is tremendous. But do you think you can keep that efficiency at a higher volume given enough time? Given 3 years, you're actually able to maintain the per unit efficiency, but doing it at an increased volume, essentially duplicating the existing operation.
I can definitely see ourselves spreading out. Like I said, at the end of the day, it's just drilling deep enough, drilling ahead of you, right? Listen, we're just on a postage stamp right now, within our 28 kilometers and believe me, with this kind of grade, I can definitely be mining, 15 kilometers away, and with this kind of grade, I can afford to get a truck all the way to the process plant. I can carry this material very far
Yeah, and I think your ability to build, commission, but also train the people to create an independent, functional, sustainable unit that can continue to operate the mine and sustain it, right? That's key, because you obviously want to move on to the next project here, Eagle Mountain, and build that, and then down the road, hopefully building even more mines within Mako and creating a real precious metals company here. I want to ask, before we briefly transition to Eagle Mountain, how are you thinking around that potential expansion with also actually building Eagle Mountain, right? So do you think is it in the cards that they can be done simultaneously, that it could be done previous, or do you more feel like it will be after? What's your snapshot of it right now? What's your current thinking around it?
Oh yeah, I mean we have cash flow that like the reason why our exploration budget was assigned at $10 million was not because that was our cash availability. That was literally the limit of what we can do with our current infrastructure on how we're going to be drilling out this deposit this particular year. And we already talked about the numbers, that the mine from an operating cash flow perspective is going to be multiples of that. So there'll be external capital. Where that external capital has gone for the last 6 months has been, we repaid.
I think actually
$9 million exactly. We
not
repaid
a
$9
capital
million.
point of view. I think it's quite clear that capital is fine. Yes, can you execute? Could you execute? You're thinking on actually being successful, because you can build the expansion, sure, but can you? You have the time. It's more of a time thing. The timing. You think that's?
It's actually interesting about Jesse and his group. I would I think they champ at the bit to build stuff. In fact, I think if I put them in a category, it's like that team is like specifically set up to go and build mines, small and medium scale mines, like they did with Eric's Silvercrest over at Santa Elena, with the PCM work they did there, where they're operators with the predecessor of Mako, like they built San Albino in one of the most challenging environments in the last 100 years. I think that is like the gold-plated group to go build small, medium-scale mines in the Americas. They're very good operators, but I would say in terms of the natural DNA of that group, it's actually more in the former than the latter. So I think when we're dealing with two projects in terms of additional hiring, absolutely, right? I mean, we don't actually have any extra excess people over at Mako right now. In fact, one of the key aspects of the deal was to bring over everybody from Goldsource too, because we need to have not only continuity, but also actually real on the ground support as well, and that's going to get supplemented. So the skill sets that our team has is to do exactly that, is to work on both at the same time. But will it require additional personnel? Yeah, absolutely.
And you're envisioning construction decision for Eagle Mountain early 26 or late 25, right?
Yeah, that's right. I think we have like a realistic timeline to get this thing with construction permits by the end of next calendar year.
Okay, and in terms of the potential expansion of San Albino, that's a bit more elusive in terms of when that will
Right,
happen.
because it's not based on a schedule or permits. It's based on like, do we actually have enough resource in front of us? So it's like the drill bit is going to determine that expansion plan. But if we made that decision, we can, from a standing start for less than $4 million, we'll be able to expand in within 6 months, 7 months maybe.
Yeah, and realistically, I mean, I'm trying to push it to kind of try to say what you personally think is realistic. I mean, you're going to have to do a bunch of drilling, but what do you think could be the a range of time when this could take place?
Yeah,
is it 2 years out? Is it 4 years out? You know?
Yeah, it's so. It may not seem like it with this presentation, but I actually do have a lot of humility, right? So and one of the things that's humbling with San Albino, and I kind of like alluded to it, it's complicated, right? So we knew this was going to be a complicated ore body going into it in 2019, and we kind of knew what the level of drilling that we needed to do to get a resource. In fact, like I think our 2020 resource was overkill. I actually spent a lot of time in the last few weeks kind of going over some of the geostatistics about this with our guys, and we took that, depending on how you count, anywhere from a 10 to 15 meter spacing ore body. And if you did that and applied it to the rest of the property, you would never be in a situation where you'd have enough resource to do 1,000 tons a day. The good thing is, and I've made this quip before publicly, is that when you're in the zone, you're in the zone. And when you're not in the zone, you're not in the zone. So I think the approach that we're taking going forward is, let's focus on where we know that we're in the zone, and we'll take, I don't want to say liberties, but we'll definitely loosen up the parameters on getting those ounces in front of us, knowing with all of the experience that we've had over the last 4 years on how to mine this project. And anybody that comes down to the site, they kind of recognize just what a good quality miners our guys actually are. They don't think that any other mining company would actually be able to deliver this type of ore body the way that we have, just because of the complexities associated with it. But we're taking that knowledge that we've had over the last 4 years and applying it, loosening the parameters so we can put ourselves in that position. Because the one thing that became very clear, that as hard as we thought this ore body was going to be in 2019, it's that and even more complex. And that's probably the biggest limiting factor on us being able to get enough comfort on the resource, because we know how challenging it is. And that's why we have to approach the world in a much smarter way. I think the first 6 months of kind of like that mode, the biggest and probably most easy to understand approach is kind of like changing from core drilling to RC drilling. That speeds things up immensely. But also on the more subtle, which is probably even more important, on how we model these things, being able to deliver it. It's just we're getting better every day, and by getting better and better, it means we can actually loosen up some of the parameters and accelerate some of these things. But this is not like you're in you have a Gantt chart and say, all right, if you do $10 million of exploration, you're going to be able to expand in 2025. There's a lot of good parts about Mako. That is not one of them at all.
But if we just talk briefly about a couple of the points here, so between now, between closing of the deal and then getting to a construction decision, what are the main activities to get there, and what are the expected kind of milestones along the way of completion? Permitting, potentially refining, engineering, and doing infill drilling and so on. What are the main activities, and when do you expect them to take place?
So sort of post-closing of the deal is you're referring to, so that, we'll see. Obviously, we're looking for shareholders to approve this deal, and the shareholder vote is in the middle of June. So post that, assuming it goes as planned, together with as part of Mako, Jesse, Frank, and his team, we would really, our view is to really continue to focus on permitting. Of course, there's more of a budget on the exploration front, so we can circle back on some of the targets, generative targets, and maybe late stage exploration targets, and of course some infill work. But a ton of infill to do. I mean, there was some inferred resources within the PEA, so that component of the resource which be inferred, you'd want to do some infill on that. But the bulk of the saprolite is already an indicated, so it's a higher quality, higher confidence resource, part of the indicated category. Some of the saprolite's inferred that made it into the PEA, but really phase one for the first 4.5 years is saprolite only, right? So there's not a lot of infill that is required for phase one. Phase two, which is years down the road, would require some infill, and that's within the fresh rock, right? So, and certainly there's infill that we can do, and I know that's something Mako would like to do, but really for phase one, there's not a ton required there. So yes, some drilling, some generative work. I think there's a lot of the other parts of the property that we would like to take a look at and scratch below the surface. A lot of the exploration we've done has really been with augers, trenching, very much surface work. We've not gone deeper on the broader part of the Poddy, nor have we gone very deep within the main Eagle Mountain deposit as well, which hosts the bulk of our resource. So yeah, certainly there is some exploration to do. On the permitting side, really that's for us, I think that fits in with the objective I stated overall, is this is a project that's executable, that you can fast track, the right project to fast track in the right country. So with that, it would make sense to then carry on and look to fast track the permitting. Of course, not cut any corners. That's not something we want to do. But apply a lot of rigor to the environmental studies through the stakeholder relations, stakeholder engagement, and then look to get the permits in place and be sort of shovel ready from a permitting perspective late 2025. So what that means for us is quite a lot of heavy lifting on environmental work, and a lot of that too is tailings. Tailings is an area that tends to not be as detailed as it should be within PEAs. That's probably true for us as well. Our PEA is quite detailed with metallurgy and mining studies, but the tailings, certainly we did some work, but there's more that needs to be done there. So that's going to be the focus for the next 3 to 4 months. Working with the environmental groups, the tailings groups, doing some geotech and hydrology.
And generally, when you infill the mineralization, has things changed significantly when you go up in confidence of the categories? Does the grade distribution, does the grade go up slightly, or does it just remain essentially the same? Is it very homogeneous throughout the deposit so far at saprolite level and also deeper?
Yeah, we did a resource in 2021 that was sort of almost 50-50 indicated inferred. Then the next year we did. There was about 18,000 meters of infill, approximately, and from end of 2021 into I guess late 2021, and then put out an updated resource in 2022 with a higher proportion of indicated, and the grade didn't change. The grade was substantially the same, both within the saprolite and the fresh rock. So yeah, we didn't see any changes there. Maybe a slight uptick in grade, very modest. Of course, we would have liked the infill and that expansion program to take that resource to something larger. But the 2021 resource was 1.7 million ounces total indicated and inferred, and the 2022 resource was 1.8 million ounces, with a higher proportion of indicated. So that was the objective, is mainly infill, and that indicated resource went from, I think it was 848,000 ounces to 1.2 million ounces in 2022. So that's the resource we built the PEA around, was that 2022 with the 2022 MRE, mineral resource estimate, and with really the focus on that 1.2 million ounces of indicated.
In terms of the Eagle Mountain and Goldsource geology, and we're jumping over to Guyana, what gets you excited about that geology compared to San Albino? Just high level.
So it gives me chills because I worked years ago at Las Cristinas, which is, when we were working there for Placer Dome, it was over 10 million ounces. Now I've seen it in presentations, they're talking 20 to 30 million ounces. That's in the same belt of rocks up in outside of Guyana and Venezuela. So I'm very familiar with that geology. That's also hosted in saprolite. I saw some similarities. I'm not saying they're the same deposits, but it's interesting they're in the same belt of rocks. I see some similarities. Grade is very similar. How the saprolite is similar, and it's fairly, untouched with modern exploration. They've done a fantastic job developing resources, but this is a place where you've got all over, you know, guys that are mining gold, alluvial gold, without identifying where the source is. So, in terms of potential to expand it, I think it's got fantastic potential. They've got a very good crew that's been dedicated, and actually a lot of similarities to what we have here in terms of guys that have been on the project for a long time, know the project really well, know the local people. So for us, a lot of those things are a perfect fit. I also know a few of the people around in that area because I actually have looked at that area in the past, and yeah, I think there's potential to expand it. The other part I like about it is that we would be able to phase it by fairly low capital intensity, starting with the saprolite and then go into the hard rock down the road. And along those lines, I think it's interesting because we've looked and I'm just aware of several projects that were good projects that haven't gone ahead because they don't have the team to put it into production. And I think a lot of people don't appreciate what a critical part of that, this whole in the mining sector that is. Because as an exploration geologist, it's like I thought, well, you just have to find it. But what I found out is no, I'm an economic geologist. That means I find things that are economic, things that you can mine and make money. So in order to make money, you have to build the mine. And just building the mine doesn't make it economic. You have to build it, and then you have to make the adjustments so that it actually produces. And that part is where a lot of people fall down because you can hire a contractor to do it and put it into production, but that doesn't mean that it's going to produce profitably. You need to have the guys that know how to do that fine tuning and actually make it produce. And that's what's exciting about our company is that we've got, with Jesse Muñoz's group, guys that have that experience that have put multiple mines into production and made sure that they produced as planned. And that was the experience I had with Placer. We had a group that did just that. They went around the world and they built the mines and put them into production. We had a 10-year period where we built 9 mines on schedule and on budget. And for me, that's something that we're developing here within Mako is something very similar, but at a smaller scale with that potential to grow.
Could you talk about kind of high level your view on Eagle Mountain? What you think about the asset? What you think about the opportunities and just the nature of that construction?
I believe I've known about this project for I don't know 12, 14 years. I've been to the site many times. So I believe in this project for a lot of years, and I think it's going to take a special team like the one we have with us, and I've had with me for almost 27 years, to be able to build a project down there. Whether we go in stages and build it, or we go full blown and go to the sites that we need to go. But I think that the team that we have is probably one of the things that is hard to find and nowadays is having a team, not just a team that is expert individually, but as a whole. Part of the success buildings on Albino that we got hit with 2 hurricanes on the construction, plus we got hit with COVID. We still never stopped the construction. We commissioned it because the team's been together for 27 years, right? So somebody starts a sentence, somebody else finishes the sentence because we know what it takes to do this thing. And I think that's what it's going to take to build that project in Guyana. And that's probably the biggest biggest reason why we felt that this was a really good union of projects. Is I think that challenge is going to be more than anything would be the having the right people to build the mines, which we think we have it, and that's what as far as we got to get in there and start really looking at the model now and see how it's done. But some of our key personnel, like I'm sure you heard from Frank Powell, my economic geologist, and he's been in that part of the world. He knows saprolite, and so we all had a lot of experience on that. So it's not a surprise to us to do that work.
Yeah. And I guess before I ask another question, which project that you worked on previously would be the best analogy to what you think Eagle Mountain will be?
Well, done some work in South America and actually in Central America, like in Panama, and so where we had a lot of problems with clay. Clay is probably one of your number one concerns on a project. So if you understand clay, you understand silt, you understand saprolite, and the other thing is weather, right? Once you understand building projects in the Amazon or the rainforest, is a lot different than where I'm at right now in the desert, or where we build projects in Alaska, where it's real cold. So we built projects in Alaska all the way to the south from there. So our team has a lot of experience dealing with not just difference of geology, but just climate. Because sometimes the climate can really put a hamper on your project. So yeah, like I said, we work with a lot of materials that could be very challenging, especially in the processing, right? When you're trying to recover some really fine gold particles, and for gravity or absorption, however you're applying the gold, you have all the expertise to deal with whatever that deposit hits you with.
And then I wanted to inquire, you're a private company, obviously, but the construction firm that you are an owner of, I presume, how is it? Is it working as a consultant with Mako? I mean, you're an executive at Mako, but you're also an owner of the private construction firm. So will this firm take on other projects simultaneously as you're doing the builds for Mako in the coming 5-10 years? Or how's it structured and dedicated?
No, we're exclusive to Mako. So
Okay.
all my people are exclusive to Mako, unless Mako has a directive to look at another project or doing it. Any other thing that we would look at will be through the directive of Mako.
And have you I mean, for example, I could see potentially how San Albino is poised for a ramp up simultaneously to Eagle Mountain being built. Do you think? I mean, is that something to semi-project? Eagle Mountain is an entire build, but could you handle that within the group, like two separate projects simultaneously? Is that within your capacity?
Yeah, I think like right now, even at the San Albino, we have the future general manager, which he's been on training for about 8 months now, and that's through our group that we build mines. So everybody has given the task, and the reason a little bit behind is because of COVID and everything, and because open borders in the U.S. we lost one time we lost 40% of our people that we trained. So we had to retrain people, and right now we have that project pretty much, I would say 98%, to where I could get all my key people out of there, and the project continues operating as it is operating right now. And like I said, we're always available. If something happens, that we just send somebody back to Nicaragua, find out what could be happening. But and believe me, the people that's been with me for about 30 years, the group that I formed 30 years ago was all these out of hundreds of people, mining engineers I'd hired 2 or 3 of them that their passion for precious metal mining is building mines, right? So they they're not getting paid to run mines. They want to build mines. They're buying at the bid, right? Trying to get out. Jesse, where's the next mine? I said, well, wait a minute. Yeah, we got Goldsource coming up, and so they're already looking at, okay, how am I going to logistics? How am I going to get mills over there? How am I going to get equipment down there? And all that stuff. So they're anxious to move on because we have. This is probably one of the mines that's Albino. We've been there the longest because of COVID and everything. So, but these people are ready to move on. So it's perfect. It's perfect timing right now to move our people in. Plus, we can all our sources. We can add 20% to our expertise or our personnel very quickly because a lot of people follow us that we build mines, so we know where to. If I need 5 more mine engineers, senior level, I can get them very quickly. Metallurgists, we can get them, even though we keep metallurgists on staff, but we'll always have access to additional expertise as we need it. We can ramp up.
I wanted to say, to kind of get your ballpark figure, you have, let's say, 7 to 8 quarters before financing. It's time to finance Eagle Mountain. How much corporate cash buildup do you think? What's the range you're thinking you're able to get to before then? Is it like $30 million or 40 or 50?
It could be, and actually, I mean, the this is another one of the differences between Nicaragua. So a lot of people criticize Nicaragua because of the geopolitics there, and rightfully so. I think that there are certainly a lot of very valid critiques about it. But it hasn't really affected us from an operational perspective. In fact, it's been, as I mentioned earlier, it's actually been a really good jurisdiction and a clean jurisdiction. Like we haven't seen any corruption. Like we've seen more corruption in Mexico and the United States than we've seen in Nicaragua in terms of how we were operating the mine over here. So it's been very, very good. One very valid criticism about Nicaragua is that you can't get traditional access to capital, bank capital, certainly bank capital, and even from the equity market perspective, it's limited, right? So if you actually look at our balance sheet on Q4, we took our payable balance down to less than $6.5 million. I think it's like 6 flat right now, and this is a company that's doing close to $10 million, let's call it $9 million of revenue per month, right? So for those that are familiar with the mining space, if you do $9 million of revenue a month, you should not have a $6 or $6.5 million payable balance. It's not an efficient balance sheet. Part of that is because we like to pay our bills and we like to treat our suppliers well. Part of it is because of the restrictions in Nicaragua that it effectively becomes a cash business. So Guyana is different, right? So Guyana is a wonderful jurisdiction. It's small, so it doesn't have like a super well developed banking industry, but everything is changing. So you're going to have this huge pocket of capital that's being generated from Stabroek. Like now, I mean, the billions of dollars are flowing into the government coffers, their sovereign wealth fund, the banking industry in general. So unlike Nicaragua, there's actually a valid path towards being able to get some forms of debt capital and potentially even some forms of cheap debt capital that come with it, which changes the entire nature of what that project can be, right? So what Mako can do and what San Albino can do is provide a healthy and depending if the mine and gold prices hold up, potentially even the entirety of the equity requirement for the project. And then we always have the ability, a much better situation than in Nicaragua, the ability to have the rest of the finance, if needed, coming in the form of non-equity alternatives.
But like, I mean, just doing some simple maths here, like if it's a 40-60 finance for phase 1, it says 100 million capex. According to the PEA, I mean, that's $40 million. I think it's quite clear that you'll be able to get that into corporate, no?
Sure. I mean, quite clear or strong words, but you're right. It's like that's how the math works. I mean, like mining is challenging, and like gold prices can go up or down, and like obviously, if you go look at the history of Mako, we've taken our twos and fros and ups and downs too. So there is risk associated with it, but it's not an inconceivable thing where the equity contribution of this project is going to be exclusively funded by the cash flow coming from San Albino.
I think honestly the most controlling factor of that is most likely how much you decide to deploy organically in drilling and so on at San Albino. So I think that's very good for people to understand, to comprehend that dilution is not extremely likely, and to crystallize that your cash deployment, I mean deploying excess cash, you're going to hold it in cash on the balance sheet or in corporate likely. You're not going to do any other acquisitions, most likely, at least as a base case. If it's not extraordinary like this one with Goldsource. Right?
So we've been very active on the buyback. That's going to be price sensitive in terms of where our shares have. I mean, everybody like scratches their head. You're a junior mining company and you're buying back aggressively, and then you look at our like we actually bought back a lot of shares in Q4, but we bought back $400,000 worth in the context of a mine that had pre-tax cash flow of 17 million. So it's like, yeah, it was a lot of shares because you're used to a junior mining company that doesn't actually have any money, right? So this is different. So we've been seemingly aggressive on the buyback, but really it's like a tiny fraction of our cash flow. I would much rather actually have a more diverse shareholder base over there and then grow the cash balance over time. No question about that. I think I get a lot of questions about dividends and like Wexford and controlling shareholder and certainly other elements of their business. They love dividends. They love returning cash to shareholders. Chuck yells at me like once a month about when's my dividend? When's my dividend coming? Mako needs to be in a situation where we have like a sustainability of a resource. So because if we say that we're going to be doing a dividend, it needs to be sustainable over a long period of time. There's an affiliated royalty company called Sailfish, and Sailfish has a 100% payback policy on that. So 100% of its cash flow gets returned to shareholders. Actually, even on the dividend policy, it goes back to Diamondback. Diamondback was actually a thought leader on this as well, is that they have a fixed and variable dividend policy. So they have a fixed dividend of X, and then if there's a lot of cash flow because of oil prices or performance, then they wind up paying an additional Y%. So last year it was close to $2 billion, actually over $2 billion in dividends that they gave back to shareholders on top of that. So we're not against that. But at the same time, we're not doing it as a gimmick, right? So we're not paying a dividend because shareholders say, I need to invest in you because of a dividend. We would pay a dividend because it's part of a rational shareholder return policy associated with it. To your point about acquisitions, though, like I said, it's in the title of our presentation, the title of our press release. This is a platform. The expectation for our shareholders should be that this is putting us into a situation where we're going to start our path towards explosive growth. We don't do stupid M&A. We don't do M&A that we think we need to do just because we put platform in the title of the press release on the acquisition. But what this deal does do is that it does fix a lot of the negative attributes that both company had. For Mako, it was a relatively small delineated resource. Obviously, there's jurisdictional diversification over there. For Goldsource, it's access to capital, like the operating team to come with it, and also from their perspective, from jurisdictional diversification. Those attributes now change. It makes the combined company better. It makes M&A easier. So I think shareholders should have an expectation that more will come. Nothing will come until the end of June, I can tell you that. But once the deal actually closes, we're definitely going to be looking, because the opportunity set, I've said this publicly before, it was actually a very, very small set of companies that we thought was transactable for us, given where we were in Mako. And I think because we had deep-seated relationships with the management team over there, they were able to invest the 2 years of time that it took for them to understand our asset. And there really weren't all that many companies that were willing to commit that time. Now that we actually have like more attributes associated with us that we can approach people in a more conventional way, it actually expands our opportunity set. So I think the probability of more acquisitions has grown. So shareholders should take that into account.
So it sounds like you're not going to die on the hill of having all cash equity for Eagle Mountain. That's clear. It's always a trade-off between the ways to deploy capital.
And everything should be everything should be funded itself, right? So like the project should be funded on its merit. It's obviously easier to fund it if you have the cash to it, but it's like you can't manage a business where I have to wait for Nicaragua to generate X number of dollars in order to advance that. It's not how the real world works. And Diamondback didn't do that. It's like Diamondback is a very cash flow generative business, but like it does acquisitions and it capitalizes them. It's like I think the deal that put them into the S&P 500 a few years ago, they were able to do like an overnight capital raise in the billions of dollars to do it. So it's like you can wind up doing stuff like that the bigger that you get, and like I think most people kind of understand it, but it's always a little bit of a head scratcher. The bigger you get, the easier it is to do bigger transactions.
If you just concisely put it, what's your like 5-year vision for the company? Where would you like to see the company in 5 years from now?
Right. So there's within the post June 4 corners is that certainly within 5 years, San Albino is going to be at 1,000 tons a day. I have not seen any difference in like statistical difference in grades between what we have over at San Albino and Las Conchitas and other parts of the property. So at 1,000 tons a day, that equates to let's call it 80,000 ounces a year of 75,000 ounces a year of production. They and again generating at these gold prices over $1,000 an ounce. And then Eagle Mountain will be doing another 65,000, generating maybe close to 1,000, maybe not as robust as San Albino, but very pushing close to it, especially in its first phase of the saprolites. And then given the 5-year number on that's the stuff that we can control within the post June 4 corners. But within 5 years, I expect this company to have at least one or two other assets that will have a very, very clear path towards production going forward as well.